Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, can you teach me trading techniques? Answer by Arpit Pauser. Once you know the basic theory of a trading, then the next major level of trading, which is technical analysis such as support and resistance, you should know. Most of traders talk about technical analysis and think trading, but basically, it is struggling between the bulls and the bears, or essentially the fight between buyers, demand, and sellers, supply. This is exposed by the price as a security fluctuation above i.e. resistance or below i.e. support. All the member who related to the market, they need a good understanding of the market basic terms, otherwise they can't take benefits of trading perfectly. If they want, they can take advice from share advisory firms like us. Trifid Research. It helps to make profits with its best free stock trading tips, forex tips, and free Nifty trading tips. Figure 1. As you can observe in the Figure 1, basically support is the point of price by which a stock or market probably down. Resistance, on the other side, is the price point that a stock or market probably exceeds. These support and resistance levels are shown as an essential part and form of market analysis and supply and demand of the market. These are the levels where a lot of traders are prepared to buy the stock, i.e. condition of support, or sell it, i.e. condition of resistance. If these movement lines are broken down, the supply and demand of the stock and the theory behind the stock's movements is considered to have shifted, in which situation new levels of support and resistance will probably be recognized. Round numbers and support and resistance. One form of general support and resistance that deals to be demonstrated across a big number of securities is called round numbers. Round numbers are in the form of 10, 20, 35, 50, 1000 and 5000 tend to be significant in both levels because they often signify the main psychological rotating points on which several traders will apply buy or sell decisions. Stock buyers will frequently buy big amounts of stock once the price begins to fall along a major round number like at $60, which create it more complex for shares to down approximately below the level. Sellers begin to trade off a stock as it shifts toward a round number max out, forming it tricky to shift past this higher level as well. It is the enlarged buying and selling stress at these levels that makes them important points of support and resistance in many situations, mainly emotional points. Role reversal. Once resistance or support both levels is cracked, then roles of these levels are invited. When the price downs lower than a support level, that level will turn into resistance. And when the price increases higher than the resistance level, then it will frequently turn into support. While the price shifts to the previous level of support or resistance, therefore, that supply and demand have been moved, causing the broken level to overturn its role. For an actual opposite to occur, though, it is essential that the price creates a serious move by either the support or resistance. The significance of support and resistance. Support and resistance study is a significant part of the trade because of it can be used to create trading choice and recognize when a movement is reversed. For instance, when a trader recognizes an essential level of resistance which has been experienced many times except never creaked, they may choose to take benefits as the securities shift toward this position because it is improbable that it will shift previous this level. Support and resistance levels are equally analyzed and validate trends and require being checked by anyone who employs technical evaluation. While the share price remains among these levels, the trend is probable to carry on. It is necessary to remind, although, that a crack beyond the both levels, such as support or resistance, these stories do not hold to be an opposite all the time. We take an instance, if prices shifted above a level of resistance on growing trending channel, the trend have amplified, not an opposite, that implies the price approval is predictable to be earlier than it was in the channel. Trader always check these levels before trading and make own strategies for different trading segments. In Nifty Index trading, they analysis support and resistance level of Nifty Index companies and form Nifty tips, and for future and option trading, they form option tips and future trading tips. Being awake of these necessary support and resistance position must affect the approach that you apply for trading. Traders must leave placing bids at these main points, as the region surrounds them is frequently pointed by a lot of instability. Sometimes if you feel full confidence about specific dealing which close to a support or resistance level, then it is essential that you should follow this simple basic rule. Always, do not put orders straightly on the support or resistance level. FIU. Answer by Q Indian Pragma. Hello bro, I could help you with the links, which could make you to understand the technical analysis easily and quickly. Please follow this link, Varsity by Zerodha, all things stock markets simplified, markets, trading, and investing simplified. And check the page, where you can learn each and every analysis in more detail and also in very simple way. You can also download as PDF. This website has all information for a trader, intraday, F&O, and also for investor. You can learn all charts, trends, candlestick patterns, single and multiple, moving averages, Dow theory, Elliott wave theory, Fibonacci retracements clearly with examples. That's the specialty, and also there are some experts to clear your doubts in every lesson. You also can subscribe to this channel technical analysis course for easy understanding. Open an online trading and demat account with Zerodha and enjoy the lowest brokerage. Answer by Praise T. There is no such thing as a technique. You just need to go into live market and learn by mere experience how price tends to act in market. It's just by experience in live market you learn, and no one can teach you this thing.